Greg Bolanos is talking with us about the markets, the economy. He mentioned interest rates just a little while ago. You figure or are hoping for 2 interest rate reductions by the Fed this year. Craig, that sounds like a pretty safe bet, don't you think?
Well, I'm planning on 2 rate cuts this year, one in September, one in December. If you ask what's on my Christmas list, though, I'd love a total of 3. I've been consistent about that the entire year.
You might get one in July, don't you think?
You know, I don't know that we're going to get one in July unless all of these trade deals really start to get cemented. There's a rumor that we've got the framework for China ready to go. There's a rumor there's another 9 to 10 countries ready to go. But the only trade deal we really have is with the UK. We need to wait to see how that shakes out so the Fed can feel confident in making their decision.
And that UK deal is just a fraction of the import and export business that this country has. UK is not a major trading partner with us. Europe is, Canada is, Mexico is, China is. And the president said that we, quote unquote, signed a trade deal with China. Well, if we've signed it, what's in it? And what does signed mean when Donald Trump says that? Do you have any insight on what we've decided? Like, what's the number? Craig, is it 145? Is it 20%? What's the number?
You know, we don't know the number yet, and Secretary Bessent communicated to us that we have the framework of the deal, but we don't yet have anything signed. I think we kind of see where we're going, though. You know, if we like your country and you like us back, it's going to be 10%. If we're a little bit confused on whether we're friends or not, it's 20. If you're definitively our enemy, you don't like us and we don't like you, it's going to be 30. The quicker we get to wherever we're going to land, the sooner that CEOs and independent business owners across this country can better manage their supply chains, make the efficacy of their decisions. We just need things inked regardless of where they end up.
Craig, how important is it that the Fed lower rates?
We need to get housing moving, John. We got to get housing moving. I'm happy that we're seeing the benchmark rates come down, but I've said it all year. I want to get people out of bunk beds and starting to buy bedrooms because so much of our economy gets unlocked through consumerism. People spending money. And when people move from house to house, there's a lot of money that gets spent. So you want to keep the soft landing intact. You want to further grow this economy. Yeah, I need some rate cuts to come through to really see the action on housing.
What are you bullish on? I mean, you're hopeful for the housing sector, but what's the area that you think is going to do well between now and the end of the year?
Well, I think between now and the end of the year, it's undeniable that technology continues to be transformative, that companies that are innovating are disrupting industries. So I think everybody needs to continue to have the proper dose of what I call technology and communication stocks. Boy, that was too easy. But I don't think people should be looking past healthcare. I mean, some of the largest stocks in healthcare got crushed earlier this year. But when you look at the valuations in healthcare, you got to start to get excited. And you can also look at what's on sale. Energy companies are one of the sectors of this market that are definitively on sale. And I don't think fossil fuels are going anywhere anytime soon. And heaven forbid there was some disruption in the Strait of Hormuz or other places. You would see a spike overnight in West Texas Intermediate and Brent. So I think those are just some of the ideas that I see moving forward.
You said you don't think fossil fuels are going anywhere anytime soon, but they are going to go anywhere eventually. What do you make of the auto sector? What do you make of EVs, batteries? Talk a little bit about that.
Yeah, it's the principle of timeliness, right, John? I think the concept of decarbonization is fantastic, whether it's solar, whether it's wind, whether it's this or that. But it's interesting how in America, people suddenly push back on EVs after EVs being all the rage. I'll be curious to see where EV credits and various other things end up in the big, beautiful bill once this gets out of Congress and gets onto the president's desk. But longer term, I think what you're seeing, which is hybrids and plug-in hybrids, remain the future bridge until this country eventually has a larger focus on EV, which is going to take a ginormous infrastructure upgrade.
You know much about the Senate parliamentarian? Speaking of the big, beautiful bill, it's interesting that this one woman, and we may not have known we had a parliamentarian, has now been picking certain components of the bill as it went to the Senate, and she's saying, you guys can't do that. Now, some Republicans in the Congress are saying, well, I know what the fix of that is. We need a new parliamentarian. But I wonder how that's going to shake out. You got any thoughts about how this bill's going to emerge?
You know, I don't know, but here's what I do know, John. Everyone was hoping that things were going to be permanent. It's clearly not going to budget score to be permanent. People were hoping for a lot of big expansions to the Tax Cut and Jobs Act. I think it's going to be expansions at the margins. And given the state of current affairs relative to Treasury yields, the state of the U.S., fiscal situation, the amount of interest we're paying on our Treasury debt, the amount of money that we're borrowing, I don't think there's any big surprise that there's going to be some dissenters, even from the president in his own party, because people want to make sure that we as a country don't write checks that our country can't eventually cash. So we'll see where it goes. I wish I had something better for you on a Friday afternoon, John.
Well, how would you characterize the tax rates in this country on income?
Well, I mean, the tax rates in this country on income are they're the lowest I've ever seen in my career. They're the lowest that most people have ever enjoyed during their lifetime. If we're talking about the marginal tax rate on ordinary income, if we're talking about the low capital gains rate, the low qualified dividend income rate. And for that reason, I think people really need to put themselves in a position to future-proof their retirement, John, because it's not bear markets and recessions. Those just come and go. It's TIR, taxes in retirement, that could be the real culprit to disrupt many 20 to 30 years from now, because I think we're going to have to find ways to pay for things, and longer term, we're going to have to find creative ways to raise revenue.
Yeah. So even if this 2017 tax cut rolls over, renews, it would seem to me like this would be a good time for a Roth, right? I mean, we are going to eventually, just me wondering out loud here, we're going to have to see higher income tax rates, aren't we?
It's just math. And the math eventually has to be proven out. So, John, you just said it. Everyone who's listening, your enemy in retirement is taxes in retirement. And I encourage people to embrace things like Roth contributions, Roth IRA conversions over the next several years while favorable rates are likely to continue to exist. Because on the other side of that, it's just a mathematical equation.
Right.
Tax rates are likely going to go up in the future.
But Craig, so suppose we did let this thing sunset and we went back to the rates previous to 2017. I wonder how onerous that would be. Maybe that's the necessary sort of pill that we need to swallow. What's your thought about that?
Don't even say it, John. If we couldn't renew this tax bill, we need to reset market conditions in a dramatic way. The renewal and marginal expansion of the Tax Cut and Jobs Act is a pivotal ingredient in my narrative of a soft economic landing and the party continuing for investors all across not just this country, across this globe. Yeah, this has to happen.
Okay, what has to happen is we need to extend the tax cuts. That's what you're saying?
Yes.
All right. Craig Bolanos, co-founder and wealth advisor at VestGen Wealth Partners. Click on GetRetiredStayRetired.com. Craig, it's always interesting to talk to you. Thanks for your help today.
Make it a great Friday.
News.